Good day, everyone. Welcome to the Weekly Note for September the 24th, 2023 for GTC traders looking ahead to the next week. I want to say here something right at the outset about these weekly notes, and if we ever do daily notes publicly, I want to say something about them, especially for aspiring traders. People who are experienced already know this. But please don't think when we say some things in these weekly notes, as you look over our shoulder and it's like, hey, cool, they're publishing their weekly note. Hey, cool, we might in the future publish a daily note. Don't think those are directional bets. I mean, they can be, but that's not really the purpose of a weekly note or a daily note. It provides a look ahead to the next week. It provides a way of thinking about some markets within a very specific periodicity. And it builds a general market consensus view within your mind. And then from that, you go to make other decisions. So what are we talking about? Well, first of all, we operate our weekly note and our daily note in a 0 to 15-day periodicity. That's going to change things a lot. Somebody looking at things at a 6-month periodicity or a 9-month periodicity, they may have just turned neutral on equity prices. Whereas if we're in 0 to 15-day periodicity, we just turn bearish on equity prices. Somebody that's going to have a 2-day periodicity or a 1-day periodicity, because they're a very short-term trader, is going to examine things much, much differently. So periodicity determines a lot when it comes to what is your stance on a particular market. We operate in a 0 to 15-day periodicity. So that's just first of all, periodicity determines so much. And at the same time, these are not directional bets. So in other words, when ones hear us say, hey, those GTC trader guys, Dan had mentioned that they are bearish on equity, so they've got a bunch of short positions, and they're short right now. And look at that, the market rallied, ha ha ha. These are not directional bets per se. They sort of like, which way are you leaning? You got to lean one way or the other, And it helps develop within your mind a way to be thinking about a market that's going to affect other decisions. I hope that makes sense. So, in other words, I'm just going to give you an example. Right now, and I put the note up in various venues in the social media stream, we have a bearish bent on equity prices in the 0 to 15-day periodicity. So you're short the market. Do I have short positions? Yes. So you don't have any long positions? No, that's not what that means at all. I do have long positions. But with this bearish bent, it's starting to affect my bias. It's maybe affecting things like my decisions about hedges. It affects other decisions, and which way which way is the whole thing gonna sort of fall? That's the second point. The third point is this builds a composite view. And I know others have referred to it as market awareness. That's their term for it. And I don't even know what they mean by it, but I heard the term and I liked it. For myself, just real quickly, what that means is like if you take equities, if you take treasuries, if you take emerging market debt, if you take emerging market equities, if you take commodity prices, we go through this in bullish, but it doesn't mean I've got directional bets there. But as I line all these markets up, and over the years, ones have asked how I develop sort of my view on markets. Well, I'm telling you right now, that's how I do it. 0 to 15-day periodicity. Every single day, I look over markets for the daily note anyways. This is a weekly note. And what's my stance on this in a 0 to 15-day periodicity? It doesn't mean I run out and make a bunch of trades. I might. But it just influences my thinking, and it makes me aware of the entire picture of markets and where I believe markets are at. Then, hey, Dan, you got this inflation call right. I hate the word call, though. Or, how did you develop your thought process there? This is one of those ways. I'm looking at junk. I'm looking at treasuries. I'm looking at commodity prices. I see them all doing this. That influences my thinking. And again, just like we were saying before, that will influence other decisions. I hope that makes sense. But that's the way this works. It doesn't necessarily mean I'm just running out and making that bet. I might not, but it's definitely influencing decisions. Well, first of all, let's take a look at the week ahead. Let's go to the calendar. Very interesting week in the calendar. There's some light data, pretty much the way I refer to it. In other words, data that I look at and I find interesting, but I don't give a lot of weight to it. We've got Dallas Fed, 3-month, 6-month bill auctions. Some stuff in Japan going on, which I've said I'm very interested in. I'm also very interested in housing data as of late. For those that do watch, as we do, the Fed press conferences and the Fed pressers, I remember, I think this may have been 2 or 3 press conferences ago, Chairman Powell had mentioned that he does not mind one iota if what the actions they are taking puts a damper on housing prices, and he views that as a healthy thing. I agree with him. What's going on in housing is not healthy. You know, people, I know in our area, we live in an affluent area, and just the population has exploded beyond the infrastructure's capability of keeping up with it. And at the same time, people were buying houses, as I've mentioned in podcasts as well, push and pull of inflation and disinflation within a specific locality like the United States. People were buying houses sight unseen, just coming in from another area, had a lot of money relative to the area they were moving into, and just sight unseen just were buying houses. And that's just not healthy. And just bidding them up to, you know, against competitors, other buyers. So that's all to say, I'm interested in the housing data that we've got coming out on Tuesday as well. So we've got a slew of housing data, consumer confidence as well. Should be a little bit interesting there. Moving on to Wednesday. Wednesday we have durable goods, some auctions again. Yeah, Thursday is going to be interesting. Thursday we got GDP growth rate quarter-over-quarter final for the second quarter. We've got jobless claims, and we have PCE core. These are the biggies. So Thursday is the biggie coming up into the next week. And again, like I was saying at the outset, when I look at news items, this may not necessarily be going into an economic model of mine. I may be looking at them for trade opportunities. Like, I know there's going to be some volatility around this, right? And I have to lock that into my brain ahead of time. You know, Thursday's the big day. So we've got Thursday. PCE core, consumer spending should be interesting, but the core is the big one, and then GDP should be interesting, but core will overshadow that. Not sure if I've looked at Friday. Personal spending, core PCE index. So that is a look at the week ahead as far as the calendar is concerned. As far as earnings, I think we had Costco, Nike, and I think there was a third one in there, and I'm forgetting it, but I'm trying to also get this done very quickly. Oh, I know what it was. It was Micron. So we have Costco. These are the big ones that stand out to me anyways. Others may be interested in other earnings. But Costco, Nike, and Micron. Those are the ones that sort of interested me looking ahead at the next week. Looking at the state of rates. Now this is interesting here. Let's take a look. This is a look at the SOFR curve, 3-month SOFR curve. At the moment, you will notice some changes here, and that's been been the interesting news in the last week. I believe last week, right around 2024, we were looking at 4.5%. I believe October of 2024, and now we're over 5%. So with Fed guidance, they mentioned one more rate, but Fed guidance, which is very important, they've increased their guidance tremendously hawkish, more inflationary. So yeah, here I believe we were last week, you can go back and look it up, at like 4.5%, somewhere around there, maybe been 4.75. Now we're above 500 basis points. And for Octave 2025, we were around 3.5%, and now we're getting closer to 4%. So sort of interesting on the guidance from the Fed turning more inflationary. And with oil prices, which I'll get into, as I've said before, I'm a higher for longer guy. I think, we have to have higher rates for longer because we are not out of the inflationary route yet. And I am still very much worried about a repeat of 1977 to 1980. Now, looking over major markets. Let's take our look at major markets. Overall risk, proprietary model we had last week, I said it was bullish. It's flipped over hard to, it's just a model we have that looks at many markets and sort of gives us a risk on, risk off type of bet. It's definitely flipped over to risk off. And that's a general overall bias, as I was saying at the outset before. Equity volatility, what are we at? We're at like 1720 or something like that on the VIX. However, when we do look at VIX term structure, and I'm sorry, but on my other monitor, I'm sort of flipping over to that at the moment. VIX terms, not a lot jumps out at me. So sort of normal conditions, I will put it, contango as far as VIX term, right? It doesn't matter if you're looking at October, November, December. I'm looking at them right now. That's exactly what you want to see. I will say things are warming up a little bit on the volatility front, but that's just sort of the flavor at the moment. I'm not seeing anything in VIX term that's really jumping out at us, or at least the way we look at VIX term. Now, switching over to looking again through major markets, and like I said, I like to look at volatility first and foremost. Looking at the SPOOs, we have switched in that 0 to 15-day periodicity. We are now bearish in a 0 to 15-day periodicity on equity prices. I have also mentioned that we look at different ETFs that sort of give you a look at various functions, right? This one is SPHD, high dividend, lower volatility stocks, and we are bearish here. So we're bearish on price, bullish on yield. That sort of gives you a little bit of a idea of flavor, right? You look at lower volatility stocks, think about what that's saying. Higher dividend, think about that whole sector and segment. And we are bullish on price, bearish on price, bullish on yield. Now let's take a look at treasuries. Looking at something like the beginning of the curve, that whole region right around 1 year to 3 year SHY, we are still neutral. So we are still neutral on that part of the curve. If we go a little bit farther out, IEI, IEF, and TLT, we switched last week. We are now bearish. So we're bearish on price, bullish on yield. And I hope you can see what's going on with the curve there. Or you could just bring up a chart of the curve, treasury curve. Now, looking over, and I didn't include this last week, I sort of included it as afterfart, not an after fart. Those can be dangerous. An afterthought. We do also look at emerging markets. As I said before, we use ETFs, and sometimes they can give you a conglomerate view of just all of emerging market debt as a whole. And that's a way we look at them. So you look at PCY, right, which is emerging markets sovereign debt. We are bullish or bearish on price here, bullish on yield. Okay, so when we think about emerging market debt, we are bearish on price, bullish on yield. Same thing if you look at something like VWO for emerging market equity prices, just equity prices in various emerging markets, we're bearish here. So again, the theme is from last week, we've switched, right? So we had that neutral stance, and now we're thinking, and it's got our thought processes, as we were saying in the beginning, thinking a little more. We need to maybe possibly thinking more bearish, and we are bearish on emerging market equities 0 to 15-day periodicity. High yield. High yield, the market that confounds me. We are still neutral on price, neutral on yield here, but I think it's important. Discovery Trading Group said this in the Twitter stream, and I think it's important to think that way. Keep an eye on CDSs. Keep an eye on credit default swaps in this space, because I think that's going to be interesting. And that's something I said in the Twitter stream last week, is I'm keeping an eye on CDSs in many markets as a whole. I think that's something also that you want to be doing. So yes, we were neutral on high yield price, but wary. And here with commodity indices, you could use GSCI, you could use DBC, you could use GSG, whichever you want to use. We are bullish on commodity prices as a whole index. A little bit of a dip, but that's all it's been thus far in our periodicity. Now, turning over to crude oil. In crude oil, first we think about crude oil in terms of term structure. So not this chart, just the term structure of crude oil. We are in backwardation. So let me pull up crude oil at the moment. Yeah, especially here towards the front, November, December, we're definitely in backwardation. So that tends to indicate higher prices. It's just a bias. Again, it's not some red light, green light indicator tool. Just as a bias, we are in backwardation. I think that's important to note. And that's what we look at and we think of when we first think of oil. And on oil prices themselves, on crude oil, we are obviously still and have remained bullish on oil prices. Now looking over at gasoline. looking at gasoline futures, or you could also look at what we look at as an ETF, because then you don't get the contract jumps because you don't know how they adjust their contracts on various platforms, or if that setting's been set correctly, or what you might be looking at. So we use something like UGA. And looking for UGA, you will notice that last week I said we had not turned bullish simply because we had sort of peaked above this structure that could have just been a spill to the top side. We were remaining neutral, and we are still neutral on gasoline prices. Looking it over at major markets like precious metals for gold, or GLD here. Oh boy, I really wish these would break down. We remain neutral on gold. We remain neutral on silver. And as I said last week, I would really like to have like a massive slide lower in price just for picking up bullion. But we're not there, and we are still neutral in precious metals like gold and silver. And finally, as I grow older decade by decade, I'm still waiting for this US dollar impending collapse. This is the US dollar. We are still very bullish, and have been bullish, and remain bullish on the US dollar. So that has sort of been our look at the week ahead, where we are at the moment, lining all those major markets up, thinking about what our stance is, which can influence other decisions. And that has just been what it's always been. A look over our shoulder. Our thoughts are good until they're canceled and we adjust them, as we did last week. And as always, that has been what it's always been. It's simply been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.